Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from Mainnet 2024 by Masari, and joining me for this segment, we have Andy Baehr. He's head of product at CoinDesk Indices. We're here to discuss Bitcoin leadership and how investors are diversifying into other areas of the digital asset space. Yeah. It is great to see you as always. Welcome back to TradeTalks.
Thanks.
It's interesting, Bitcoin's been somewhat sideways this summer, and you're seeing other areas emerge.
That's right. So 6 months after Bitcoin's all-time high in the middle of March, we finally got sort of the shot fired around the world, 50 basis points from the Fed that started an easing cycle. Bitcoin took that news really well and has regained some support. But what's really interesting is the other tokens, the altcoins, the bigger alts, the other constituents of the CoinDesk 20 index kind of led the way out. So a week and a half after that first 50 basis point rate cut, CoinDesk 20 outperformed Bitcoin by 4%. So that's really different from what we'd seen before, where Bitcoin had to lead the charge out of anywhere.
Why do you think investors are allocating capital to some of the altcoins and not necessarily putting it back or rotating into Bitcoin?
Part of it's just, we feel like, okay, we're in an easing cycle, right? And that's going to have implications for borrowing and lending markets, for yields. There's, I think, a little bit of renewed seasonal excitement about the businesses getting back into action. There's a bunch of layer ones. There's more trading activity both on centralized exchanges and in DeFi. So I think a lot of the protocols actually feel a lot more activity, and that's helping, along with a more favorable economic environment, to get investors excited again.
Well, maybe this is a new normal for Bitcoin, right? Perhaps you won't see, the velocity and the swings that we saw, prior to, let's call it 23, 24, right, because there is a bigger institutional presence, right? They have ways to manage risk and hedge and speculate to a certain extent.
Yeah.
Maybe, with institutional support there, you're not going to get those wild swings.
We would like to think so, and we've both been talking to some of the trading firms that are in APAC and in Europe. There's a lot of trading going on. There's a lot of derivatives trading. The lending markets are starting to find firmer footing, right? Collateral is moving in more efficient ways. Custody services are offering a broader array of services around staking and around rehypothecation. So even in an underbanked industry, right, they're still finding ways to have capital markets work. So that capital markets will sell or will provide services to the asset management community, enabling them to grow more efficiently. Just our little slice of it, the CoinDesk 20 perp has now traded over $8 billion since January, which has helped market-making firms kind of have another source of liquidity for those top 20 tokens. Even that just makes things much more easy for implementation for asset managers.
It's interesting as we sit here and meet with thought leaders such as yourself and listening to other panels and so forth, it seems to be the key theme is how market structure is starting to improve. When you think about the credit lending markets, which perhaps would have been the Wild West of the digital asset space, they're really focused on the inflection point that they're at right now, where it's not necessarily, okay, we're just going to be here to provide alternative forms of capital formation. We know we have to work with established capital markets players in the space.
That's right. Yeah, no, the expertise is there. Right. Again, just absent any major banking presence or availability of banking, people are adopting better standards, and I think gaining greater confidence, so that investors in hedge funds and in sort of long-only investment instruments will have the confidence that they need. Market structure is getting there.
Right.
It's getting more integrated globally. It's getting more sophisticated. It's getting more locked down. And as yields or as interest rates start to come in and financing becomes a little bit easier, we'll see what happens. But I'm pretty excited about the next 12 months.
What's the next catalyst then, right? So we understand ETF wrappers, they've been received well. We know that there's regulatory framework that's in the works, and it's getting there.
I think derivatives are going to be a big part, right? We were starting to see the unlocking or the potential unlocking of options on ETFs in the United States. Canada has had options on ETFs for years, and they've really helped support the Bitcoin and Ether ETF markets in Canada. So seeing that in the US is great. Seeing more over-the-counter derivatives trading around the world is going to be helpful, sort of in the upstairs kind of investment banking equivalent, right? So we're starting to see index options trade. We're starting to see swaps. We're starting to see the Ether staking rate incorporated into Delta One and options instruments and interest rate swaps. So as those start to get going, you'll really have kind of a crypto global markets setup that's really self-sufficient and that can help with investment products, trading products, hedge funds, I think that's all necessary. That will invite more lending, that will attract more capital. I would love to say there's a catalyst where you're going to see a hockey stick,
Right.
but every day that this continues and we're gaining more and more trust, the trust is going to accumulate. And I think as that starts to happen, things can really have a stronger platform for growth.
It's fascinating. We are literally living through a time where we're seeing an asset class, mature. When I got into equities, certainly, there was decades of history behind it, but we're seeing it happen in real time.
We are. It's so cool. I just spent 2 weeks in Asia at Token 2049 and having meetings with trading firms and private wealth, investment arms and family offices. They like structured products. They may or may not be ETF investors, but they'll buy principal protected notes, they'll buy auto callables, accumulators, reverse convertibles. That's just their natural kind of wrapper for any kind of investment where they want to do anything from 3 months to 2 years. So the market structure for digital assets is ready to supply that right away, right? There's a lot of options trading, there's good risk management across options books, there's good financing, there's good issuance engines. So I think in the near term, we're going to see a lot more of that, particularly in APAC, in Switzerland, in the Middle East, and hopefully, that some of that action makes its way over to the United States. But right now, we're still in an ETF-dominated market.
We are. All right, Andy, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me from Mainnet. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.